Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. It's Tuesday. We've got some PMIs today. So this might be what I mean, not to discount what happened yesterday. Yesterday was a very interesting day, but I think that this may be a bigger day. Might be one of the most important trading days of the year. In fact, you know what? I shouldn't overhype it. Let's go straight to the charts. All right. If I can get it to pop up here, which one is it? No, where is it? There it is. All right. So here on the treasuries, they were able to tread water for a while, and they did jump up there on the S&P PMI news. But in the overnight session, they fell back down, and they are now below this 04 area. Of course, there is still all the way down to probably 18 single prints over here from the FOMC day. But that is basically the area that we're in now. So it may be possible to start seeing momentum traders at the very least take their trades off, if not flip, here in the treasuries, and maybe we will actually get this repricing that we've been waiting for like 3 weeks. All right, and the S&P 500, well, they, again, it's pretty nasty in the overnight. They treaded water okay during the regular session, but then here in the overnight again, they are down. Oil took a huge beating yesterday, just kind of out of nowhere too. I don't know if anybody really has a good explanation as to why, because it seemed to fly in the face of the headlines that were coming out at the time with tensions rising in the Red Sea and all of that. Gold and silver. That's interesting that the treasuries are down in the overnight, but gold is also down. Silver is down. So does that mean, and copper is down. So does that mean we are seeing something in the dollar? Yes, we are. We are seeing a dollar safe haven trading right now. Almost back to 102.1. Just above 102. Very interesting. And then lastly, Bitcoin. Bitcoin had a big jump to start the year, but they've already given that up. Actually, that is okay. There must be a news story I've missed. There must be a news story I've missed in Bitcoin. Okay, I don't want to get too distracted here because we are going to have okay, so what is our setup for today? Okay, Barkin will be speaking at the bottom of the hour. We have the red book. That's usually not a mover. We have Jolts. Okay. We have Jolts and US ISM manufacturing at 8 o'clock. Okay, so 8 o'clock is going to be big deal. But until then, we can kind of browse around and see what's going on here. Let's see here. Dollar is firmer and trades towards the upper end of a 102.7 range. Traders await key U.S. data. Thus far, the index has eclipsed 21-day moving average. Treasuries are pressured, fitting with the broader risk tone with yields bid across the curve as attention turns to FOMC minutes since we. Oh yes, we have that today too. Wow. Okay, this is gonna be such a big day today. The U.S. has reportedly reached an agreement with Qatar that extends the American military presence at the biggest base in the Middle East for another 10 years. Houthi stuff, Chinese, Taiwan elections, Bitcoin consolidates. I don't know. Come over to Zero Hedge, maybe they've got something. Any thoughts why altcoins are selling off so much? Well, yeah, so what typically tends to happen when you're getting, strength in Bitcoin itself, because there's two kinds of crypto runs. There's the crypto run where like the altcoins and pretty much everything kind of rises, and then you get the runs where it's just Bitcoin. And what we're seeing right now is just Bitcoin. People want the exposure to Bitcoin, so they're moving their money from the altcoins into Bitcoin for the ETF thing. That would be a bad thing if the ETF does not produce more demand. But otherwise, I wouldn't worry about it too much. I mean, especially if you're buying and holding an altcoin, it's probably, you just ignore it, right? You just keep hodling until altcoin season comes. There's a little bit of movement there. No, if I make sure that I have my new squawk on here. Oh, okay. Barkin is already speaking. The central bank is making real progress on inflation while the economy remains healthy. Notes that 6-month core personal consumption expenditures inflation is now just below the 2% target. Conviction on inflation and the economy is to determine the rate path. Okay. Oh boy. President Biden will cast former President Trump as a threat to democracy Saturday in a speech set to be delivered on the 3rd anniversary of the January 6th insurrection. I gotta tell you, Biden is the worst at political messaging coordination. I think that one of the main reasons why he is so unpopular is that everything that he does is so blatantly obvious, right? Like when it was Obama and they're like, okay, our strategy is going to be, we're going to paint the Republicans as do nothing extremists, right? And then he sends that out to the talking points to all of his allies, the guys in the media, they all say what they do their thing and it all happens. And nobody is sitting there saying, well, we kind of have to ignore a little bit what these people are saying because they're all doing Obama's bidding, right? You didn't really see, conservatives would say that. If you're really paying attention, you'd see it. It wasn't like a discussion point out there. But with Biden, it's like when they decide to go for something, everybody's talking about it. It's like, okay, the thing that Biden's going to push is Bidenomics. I don't know if this is a very good strategy, but that's what they're pushing, etc., 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 right? So now it's going to be insurrection. We could talk about that. That one's actually, from a legal standpoint, it's actually kind of interesting. That's, I guess, the discussion that we're going to be having. I mean, they've already been having, but I guess we'll continue to have because Biden wants to push it. Let's see here. I think Barkin is still speaking. I didn't see any more comments from him, though. I think that maybe that's because that was just his prepared remarks. Anyways, what was I doing? Oh, yes, I was trying to figure out why Bitcoin. Okay. While many here's the headline from Zero Hedge: Bitcoin flash crashes on 15th anniversary of Genesis block. While many celebrate October 31st, 2008 as Bitcoin's original birthday, others take a more technical approach to determining the true age of Bitcoin. For the latter, January 3rd is the actual date Bitcoin materialized as a store of value and transferable currency. The Genesis block was mined on January 3rd, 2009. What followed was years of triumph versus naysayers that included critics, mainstream media, politicians, and governments worldwide. And to celebrate that milestone, crypto market flash crashed this morning with Bitcoin instantaneously puking from 45,000 to 41,000, and Ethereum followed suit. Over 550 million in crypto long positions were liquidated in the past 24 hours per data from CoinGlass, including 104 million in Bitcoin longs in the past hour alone. Cryptos are recovering from the initial puke, and while the catalyst is unclear, some market participants are pointing to this FUD post on X by Matrix port analyst Marcus Thine that suggested significant downside and expectations of an SEC rejection of a spot Bitcoin ETF. This is in contrast to the optimistic stance expressed by Bloomberg Intelligence and JP Morgan analysts. There's just one thing. 24 hours earlier, the same X user posted projections of BTC hitting 50K. Well, I don't know if it would be just like one Twitter account, because surely I've never heard of this guy before, Matrix Port. You know, I don't think all the robots are watching him. But maybe somebody, saw, oh, maybe the ETF's not going to happen, and they decided to take their profits. That's realistic. And then the rest of this article is just crypto propaganda. You going on an early rant about this? What about Biden? Oh. You want an early rant? So there was a thread on Reddit where somebody was saying, like, what's the deal with technical analysis? Why is it so controversial? Because I've been using it for, a few weeks now, and it seems to be working okay for me. And so I went with the kind of the argument that I've been using lately. So I'll switch between things to try and see, like, what do people actually respond to? Because I find this subject to be just really hard to convince people on. And so I said, well, look, if you take 100 trades and you have an edge that wins 51% of the time, that means that your net profits came from 2 trades, basically. So if you do that again, you do another 100 trades, how confident are you that it's going to come out with just 2 extra, a difference of 2 profitable trades again? Because I don't think you shouldn't have a whole lot of confidence in it, right? Because like your margin of error is going to have to be at least 1 or 2 trades, right? So if you do 100 trades and you get that result, do you have a statistically significant result? No, you do not. And so the question becomes, how much data do you actually need? How much data do you need to verify that something is truly a consistent edge? And the argument that I make is that your goal should be 10,000 trades and or 5 years. If you're doing intraday trading, let's put that in the realm of high frequency trading. I mean, in the professional world, it would be HFT. You want 10,000 trades if you can. I mean, sometimes it's not possible, and for some high-frequency trading algorithms, it doesn't really apply because your trade has such an impact on the market anyways. It changes the market too much. But if you're backtesting, that's the goal, because, if I have 1,000 trades, if we times it by 10, then I can have a difference of 200 trades. That's a little bit better, right? Or sorry, not a difference of 200, a difference of 20 trades. Difference of 20 trades is better, but that's like 2 days worth of trading, right? For some people, for some of these algorithms that are doing that sort of thing. Okay. So that then, okay, times it by 10 again. Now you got a difference of 200 trades, right? 10,000 trades total, 200 trade difference. Now you have like a statistically, I don't know 100% why it comes down to those particular numbers. I just know that like very, very few strategies will survive a backtest of 10,000 trades and 5 years. I've seen lots of things that worked for 2 years and then just blew up. What if the risk reward is 1 to 5? Oh yeah, then that would be amazing. Yeah, if your risk reward is off, then that would be amazing for sure. Okay, so I'm saying this, and there's this guy who comes in and he's like, well, but I've been trading technical analysis for 3 years, and I've made, I've quit my day job and all, so that's proof that this works. No, it's not, because what did I say? 5 years. 5 years. I've literally seen people. I hate having this conversation with people. I really do, because what I'm basically saying is, yeah, you think you're amazing because you've made hundreds of thousands of dollars, but you're going to blow up probably. And I've seen it happen. And the thing I hate to see is people posting, oh, Seth was right, I should have listened, and like suicidal posts and stuff like that. It's happened before, okay? So I wish people would listen. But it's like if somebody's made some money from it, there's like nothing you can ever do. This is like if you have a room full of monkeys with typewriters, right? And you hold them in that room for eternity. Eventually, one of those monkeys is going to write Shakespeare, right? You've heard this analogy before, right? I didn't come up with this analogy. You've heard this analogy before. If you have enough monkeys in a room for eternity, one of them will eventually end up writing Shakespeare. And in our world, in our society today, what would happen if we did that? They would do all of this stuff to look at what is this monkey? What is it about this monkey that allowed him to be able to write Shakespeare? And we would have all of these books about the qualities of successful monkeys and all of these sorts of things. And meanwhile, you're sitting here because you have, you're on the outside, and you're like, well, it was just random though. This is all ridiculous. It was just random. Okay, try telling that to the monkey, because I'm pretty much guarantee you that the monkey will be offended that you're saying that it was random and not the results of their superior intellect and all of these other sorts of things. And what would be like, so how do you settle it? Have the monkey write something else. If he writes something else, maybe he writes, another guy's works. Maybe he writes Shakespeare again. Maybe he makes his own thing. But like, if it makes sense, then maybe that monkey actually can write and you got something special, right? But probably that's not what's going to happen. Probably you're going to put the monkey back on the typewriter and he's just going to write gibberish again, right? So you have somebody that they've had some success in trading, right? So how do you verify that it's real? Well, I tell you, run on a different data set. Okay, you were profitable over 3 years. Do 5. And of course, they get upset about that. I was like, well, like, why? I mean, if you've back tested this and you've really been successful with it, then it should be a simple thing to just do the back test over 5 years and post it. You don't do that. Why is that? Why do they always get so upset and you say 5 years? Because none of them are stick around for 5 years. Almost none of them. Take 1 million and stop trading forever. Can you talk more about the proper way to backtest and really get the statistics? Yeah. You want to run it over as large of a data set as you can, and you want to have a testing data set and an experiment fitting kind of data set. So if you go and you do an algorithm, right, there's always going to be certain properties, right? So for instance, if we're going to do a momentum strategy, this is the sort of thing that I think is best suited to the kind of backtesting that you're probably going to end up doing, like the kind of backtesting you might do in NinjaTrader. Okay. Not testing intraday strategies. Listen, it's possible. It's entirely possible to find an intraday strategy that works on a single instrument and is consistently profitable with pure technical analysis, or let's just say with a systematic strategy, because maybe it's, what the definition of technical analysis is kind of fuzzy, right? We can just say a systematic strategy. It's possible. Very, very difficult, but it's possible, right? But those money managers out there, that's not what they're doing. They're running a strategy on daily, weekly, monthly bars over a large universe of assets, and it is the different correlations between these different assets that gives them a strategy that actually has the desirable risk characteristics for a fund, where you get high Sharpe ratios and all that sort of stuff, right? Okay, so if I'm doing a strategy like that, one of the key points of a strategy like that is like, how much risk are you taking, right? Because what you'll do is you say, I have $10 million under management. How many contracts, when I get into the treasuries, should I use? Because if I just put in one contract, it's not going to make any difference to the value of the portfolio. It's kind of useless, right? And so there's kind of like this risk multiplier, which I think most of them, it comes out to be like 15, something like that, or 1.5. So what you'll do is you'll take that risk factor and the volatility of that instrument and the amount of money that you have under management, right, to determine how many contracts you use, right? So that one factor you might want to optimize. You might want to see, okay, what happens if I take more risk? What happens if I take less risk? Is there like an optimal point that makes sense for this, right? So you can, with machine learning and stuff, you can just try them all, right? But the problem with doing that is that sometimes, in this particular instance, I think the amount of risk you're taking, I think that is pretty clear that that's just, it's just going to tell you statistical stuff about the way that the strategy works. But sometimes if you have enough parameters like this, it's like completely changing the strategy. And what you can do is you can overfit, is that you have like this one thing that, is like I draw a picture, like the stock market goes like this, right? And so then you have one strategy that does this, right? And then you have one part of this strategy that does this, right? And then you combine them together and you get something that matches the actual movement of the S&P 500 really, really closely, right? But you're adjusting these parameters so that it does that. You're overfitting, right? So then you've got something that still goes like this, and then the S&P 500 does this. Yep. You're screwed, right? That's overfitting. That's overfitting. So how do you avoid overfitting? What you do is you say, I'm just going to fit on this area, and then I'll run it on this area, right? And if my results from this area carry through, then I know that I'm not overfitting, right? So that's the first thing. And then the second thing is like the amount of data that you actually have, right? So if you can get it to survive for 5 years, you're golden. You're golden. It's super, super hard to get a technical strategy that lasts for 5 years, though. If the market changes every time, then no algo will survive for 5 years. So I'm thinking manual trading is best because a person could also just adjust. Well, yeah. I mean, that's exactly what I'm trying to say, though, right? So I'm saying, like, there's a lot of qualifiers here. This is where I think retail traders kind of fall into these traps, because there's a lot of nuance here, right? I'm saying, I'm going to write. Intraday to single instrument and only market data. or let's say exchange data. No level 2. Okay. So, if those were the requirements for your strategy, that has to be intraday, single instrument, uses only exchange data and does not use level 2, okay? And then number 5 would be 10,000 trades, 10K for 5 years. Okay. My assertion is this strategy doesn't exist. At least not anymore. That's my contention. I could be proven wrong. You find a strategy and I'll accept it. Well, I'll accept a backtest, except for that I will run it over multiple data sets, right? But I would accept, you can find a backtest that is intraday, single instrument, only uses the, so price and volume, okay, no level 2, and has at least 10,000 trades over 5 years, right? You show me that backtest and then I'm wrong. I don't think it's ever going to happen. Because, like John said, market changes. So you might be able to find something that is a technical strategy that works right now, then it's going to change. And that's the whole thing that I'm saying, is that, like, as you trade it, it changes the market. So it won't behave, it won't perform the same way in the future of you trading it. And especially if, like, everybody knows about it, then the edge disappears. And then what are you going to do? You have to find a completely different strategy, probably. Right? Okay. This is actually really useful. I know that this sounds like, well, you're just being a naysayer, Seth. This is actually really useful, because once you understand why I say all of these things, but put all of these caveats in, that kind of tells you where are the places where there actually is edge that we know about, right? Like, for instance, intraday. Well, okay, these sorts of things don't work on intraday, but when you go up to a daily time period, then you have instruments like the treasuries, for instance, shows very strong momentum effects. Treasuries show very strong momentum effects. You could probably do pretty okay just trading ZN, swing trading it. Okay, that might be possible. That's kind of what I'm trying to work out. Okay, why do I say single instrument? Well, one, because if I'm doing a momentum strategy, actually where the edge comes from the momentum strategy is trading a large universe of futures. So I come in and I have like 100 different futures that I can possibly get into, and I'm trading momentum on all of them. Then you have something that works. Because if you're just doing momentum on one instrument, you could have an instrument that just goes flat for years, and you can be very unhappy trying to trade that, right? But when you have, like, you know, dozens of different instruments to trade into, now all of a sudden you have a real strategy. And this is a strategy that institutional traders have been using for years and years, and I see some signs of it starting to not work as well, but it's been an edge for a long time. Okay, and what's the key? It's not intraday, it's not single instrument. Another example of a single instrument would be a correlation. Is just use another instrument, like, for instance, here in the treasuries, I could look at the Japanese yen and the other treasuries, and based on that information, I might be able to pull together something that says the correlation should be this, and so this is what my bid and offer should be. And you could create a system off of that, right? But you'd have to include data from other instruments, right? Okay. Number 3, only exchange data. So there is information out there that's not on the exchange, like information about the economy that's out there and people are analyzing and arguing about, that could potentially tell you what's going to happen in the future. Absolutely. The market is not efficient, and so there's plenty of information out there that's not factored into current price, right? No level 2. Well, okay, so if I have the level 2, if I can see the DOM and I'm fast enough, I guess that would be the other caveat for this one is I'm fast enough. I can get to the front of the queue. There are some strategies that we know about, like icebergs and catching the edge, where you can just pull a tick out of the market because you're speedy and you can see the level 2. So there are actual edges on the level 2. We're not very competitive with those, but you can do it. And then this last one, 10K or 5 years. Well, this one is not actually useful to you, right? Well, this was the party pooper one, right? Because what does that mean? You can find things that will be profitable over 1 or 2 years, and you can actually have a lot of success with them in the short term, but usually those blow up, right? I've seen multiple people blow up with this one, man. And it's sad to see. But I've seen multiple people blow up on that one. So you're saying the longer the time frame, the longer the time to exploit the edge. I'm saying that on daily, weekly, and monthly time frames, there is a large amount of empirical evidence to support momentum effects in financial markets, but that those edges do not translate to intraday timeframes. That's what I'm saying. Right. So that's what I think is. I mean, I've always kind of talked about this, but now that I know so much more about momentum strategies, I feel like this is just like a so much better of a way to go about it, right? What happened was there were the turtle traders. You've read about these, right? Like the Jack Swagger books and all this sort of stuff. And this guy, he came in and he said, okay, here's a strategy. You won't win most of the time, but when you do win, you're going to win really, really big. And I can teach anybody to do it. And he did. And what was that strategy actually? And that's the thing, is that most retail traders don't know what the strategy actually was. The strategy was you're looking at daily bars, and then you're looking for breakouts or momentum on those daily bars. And the rules that they're using for those are actually really simple. The rules are like, if we cross above a moving average, or if the close of the day is a new 50-day high or a new 50-day low, you could go short, right? You're looking for like a, new high, new low sort of a thing is probably the best way to programmatically detect a breakout, by the way. Right. I clear this. You have a stock that's going like this, right? We have support and resistance. I want to know when it breaks out here. What that means is that the close of this bar will be higher than any of these other bars. Right? So if the close of if the high of this bar is the high of the last 50 days or whatever it is, then you have a breakout. Anyways, so retail traders, they took all that stuff and they said, oh, okay, like breakouts and moving average, all these things, they work. And then they turned around and they tried to do them on day trading. Right. You see the problem? So they didn't understand that part of it is that these are momentum effects that you see over multiple days. And part of it is you're trading a large universe of stocks, and they're not doing either of those two things, right? So if you want to trade a single instrument, then you kind of have to look to HFT. And that's where I was saying, okay, so then what do HFT guys do? Well, they look at the DOM, but doing all of these other things. Oh, guess what? They're too fast. We can't compete with that one. Maybe you can find a way to do it. I can't. I haven't found one. I keep trying. I haven't found one. So what's your next best bet? Oh, what's going to happen? Use the informational inefficiencies instead. And I think that using informational efficiency is a much better way to go about trying to day trade. Isn't it kind of funny that at the very end of it all, what ends up being the best like day trading strategy is what we would think of classically as day trading. You have some speculation about how things are going to happen, and you think you know better than the rest of the market, and then you end up being right. This is just everybody, didn't want to go for that one because technical analysis, right? There's nothing wrong with a strat that works for 2 years. There's plenty of time to make billions. The problem is if the strat works in 2022 and 2023, you need to find a strat that works in 2024 and 2025. Well, okay, so first of all, you're probably not going to make billions doing that. But you could make, 1 or 2 million from doing that, yes. But if you make 1 or 2 million and then you lose it all, and that's kind of the rub, right? The things that I've seen from retail traders on technical analysis almost always ends up taking advantage of fat tails in the short term, right? And so they blow it all. That's why I always say, what would you rather do? Would you rather trade for 5 years and then at the very end blow your account, or trade for 5 years and be losing the whole time and then at the very end have a trade that makes more than all of your losses combined? Times 2, right? What would you rather have? The fat tails matter. And if the fat tails matter, you have this distribution like this, and you have this point way out here that the amount that you make or lose on this one point is more than all of this combined times 2. What does that mean? That means this is your only trade that actually matters. What will actually help you win on this trade? That's the only thing that matters to this strategy at that point, right? Make sure that your data set has enough of those in there that you're sure that you're going to get it right when it happens. That's what I'm saying. But, I've seen, so I watched this thing the other day. It was actually kind of funny because I think this guy was trading mostly Forex pairs. They were talking about pairs and Forex and stuff like that. But he was also talking about prop firms. So I didn't realize that the prop firms was as popular in Forex as it had gotten in futures, but okay. And he was saying the right things. It was like, I don't look at really anything lower than hourly bars. I'm, using the information that I know about the markets to make decisions about things. Maybe I'll look at a key piece of data and then trade after that. Maybe I think I know what the data is going to be and I trade before that. Okay. He's swing trading with informational inefficiencies, right? But what he was doing was he was supercharging it with the prop firms, right? So on top of that, he was using the extreme risk that you can do with a prop combine. Essentially, it's not your money. If it's not your money, then it doesn't matter if you just blew $100,000 or whatever the deal is. And he was talking about like opening multiple accounts at the same time and doing stuff on all of them until you get one that passes, right? And then you go and you trade that. So it's like, yeah, you can do that. You can probably make some decent money doing that. It won't last forever. Wouldn't be able to start a fund with it. But if all you care about is a little bit of money in the short term, then do it. This is why I say, like, the money does not necessarily matter, right? If the only thing that mattered to me was the money, then what I would do is I would go and open up, I would go and make a partnership with probably the original. What is their names? Man, I'm not having the best morning if I can't even remember these guys' names. The original prop firm, what is it? Top Step, that's right. Yes. See, I'm embarrassed. I can't remember that short shit. I'm not in the mode. Because I'm not stumbling over my words too much this morning. I can't remember the names of things. Top Step. If all I cared about was the money, I would go and create a partnership with Top Step, have an affiliate link in my description, come in and trade big risk reward where, like, you know, I just have a huge stop compared to my take profit. Maybe I trade multiple contracts and then try and let the one contract ride, right? And I would just do that until I get funded. Then when I get funded, you try and pull as much of it out as possible. Then when you blow the account, you just redo it. And hey, this all the while you're making money from affiliate links. And you'll get tons of people to watch you because it seems like you're constantly making money. Right? If I was doing that on my own account, then you're just blowing the account. You're not going anywhere, right? But if you can use the prop firm's money so that the losses you're not taking, and on top of that, you're making money from fooling people on YouTube, right? Yeah, if the money was all that mattered, that would work. But I don't care about that. I want to be the best trader. So I trade my own account. I look for strategies that have long-term prospects, long-term consistency, try and understand as much about everything as I possibly can. And yeah, maybe in the future I open a fund. So that would be the kind of the thing. This is the thing that nobody's done, and I think, I don't know if it's actually going to happen. I don't know if I'm actually going to do it, and there's like lots of little caveats. So I'm not going to say that this is my dream explicitly, okay? But it's kind of what I'm working on right now. My dream is start a fund. Nobody on YouTube has done that, right? I haven't seen anybody on YouTube. They're such a great trader. Okay, then open up a fund and let everybody invest in it. Actually, what I want to do, it's more than that. My dream is more than that. My dream is I want to open up a fund and make hedge fund type strategies available to everyone. That's what I want to do. There's supposed to be a test coming out where if you pass the test, you can be an accredited investor. So we would help you, give you materials. You pay a certain amount to get in, right? We give you the materials so that you can become an accredited investor. Once you're an accredited investor, then you can invest in our hedge fund. And you can, you can get in for as little as $1,000 because right now there's like not really very many places you can go, right? And then, yeah, we run the hedge fund. That nobody's done that. There's two big things. Is one, nobody on YouTube is any of these guru traders have opened up a fund, and two, made it available to everybody. That would be a real accomplishment to me, as opposed to all this shit where it's just like, make the most degenerate trade possible and then put it on YouTube and impress all these people that don't really know what's going on. And then invest into a biochem company that grows hair. Well, my understanding is that there are solutions that exist today that could probably grow my hair back pretty decently. I just don't care. When I was younger, and I had bright blonde hair, but now my hair is just ash. I don't think it would be, they having the hair back. I don't think I like it being bald. I like the low maintenance. I like the look too. Dude, I over the course, notice beard is not nearly as long as it was because I got pretty sick. Still have, I don't know if you can tell in my voice, but I'm still kind of congested. And some of my family, it seems like they're getting worse right now. So it might still be some weeks before I'm over this. And I was blowing my nose so much that I just had to shave it off. Turning Vin Diesel into Jason Momoa. Yeah, because when I shaved it, I felt like I looked like a thumb head. Like I just did not. I was like, oh man, I look terrible. I also kind of felt like I looked a little fat, which is now I'm looking. No, you're still super skinny, Seth, but whatever. you should buy a big news broadcast company like Fox News or CNBC and have a channel that broadcasts your rants all day. I'd watch. I would like to do that, actually. I would like to pull together a bunch of finance influencers. They continue to have their own channels, and then we run a combined channel that has a live stream and a certain number of videos a day that is financial market analysis. We can go and find the Bob Pisani to go together with my Rick Santelli, right? Or not Pisani. Pisani's the stock guy. Who's the guy that is always arguing with that's kind of more central bank policy? I forget his name. Larry? No, not Larry. Oh, what is his name? Now I have to go to CNBC. CNBC anchors. Oh, Steve. Yeah, we need to find the Steve Leishman to my Rick Santelli, right? And then we can argue on live stream about central bank policy. I think that would be great. How would you define a financial influencer? No, not Patrick. You know what? I always get uncomfortable having this kind of conversation because I don't really want to talk about like other people. There are definitely people out there that like there are certain things that you can do that is just like after you do that, I don't give a shit what you have to say or what you're doing. Right? Like Patrick Wayland, he's on multiple occasions come in and said that he was doing live trading and then it was not live trading and basically everything that his channel was built on a lie. And then he admits it and everybody forgets about it and he starts doing it again. And we're all supposed to give him kudos because he admitted it. Like, no, like I have zero respect for that man. Zero respect. There's absolutely no way. There was this thing the other day. Somebody wanted me to promote something. Actually, I haven't heard anything about it, but maybe we will hear about it in a week here or so. And like I ended up not doing it because once I got further into it, I was like, no, this is not what I want to, promote to my audience. Heck no. But one of the big thoughts on my mind was like, because you said there was 5 influencers. I'm like, okay, who are the other 5 influencers that are on this? Because there are certain people that if they are on this, I don't want anything to do with it. And Patrick and ICT are 2 of them. That if I knew that they are also being promoting it, I would be out. Be like, nope. Yeah, well, what Patrick was doing was he would paper trade a different move, right? So like you create 10 accounts and then you just go all in. Okay, like you find 10 trades that day and every one of those 10 trades you just go all in. Okay, and if you do 10 of them, one of them's going to work out, right? And then that's the one that you turn into a video. That's what he was doing. Like just straight up, he admitted it. He kind of disappeared for a while, and then the YouTube algorithm started picking him up again. It's, I call it Mr. Beast syndrome, which kind of pains me to do because I think Jimmy seems like a nice guy, but pretty much all of the content has been Jimified. It's you have to have the most clickbaity title thumbnail that kids would click on, that appeals to like the most base human emotions. And in the trading space, it is here. Look at this huge trade that I made. And so the people that rise to the top in the trading space are like the worst people to listen to on YouTube. It's really frustrating. But that's why I think it would be nice to, I would love to spend all my time analyzing and talking about the markets. That'd be great to do like a news anchor sort of a position. I would think that anybody setting up a network like that, that they would have more popular people and they probably wouldn't pick me, But I would want like, okay, so now we get to pick all of my favorite financial influencers. I would put Graham Stephan on there, definitely. He is I tell you what, there's a lot of shitheads in this space, but the guy at the top, he's a good guy. Graham Stephan, he has good content. He's not selling any BS, He's great. He's great. Would love to have him. Another person that I think knows what they're talking about. I don't know what her last. I think it's like Kyla Scanlon or something like that. But there's this girl on TikTok. She worked for a firm of some sort. You can just tell from the way that she talks. I think she's actually got a thing going with Bloomberg right now. So you'd have to pick her up if you're going to do a network like that. Pick up the TikTok audience, yeah. Meet Kevin. I mean, I guess. I honestly don't like Kevin. I don't know anything about him as a person, but his content I just never enjoyed. But maybe you gotta go that way. Maybe. I think maybe you could probably do. No, the person that would, add a lot to the network, but that might not necessarily be what I like. It probably is Kevin. Yeah. I honestly, I know that there's a reason why he has as much views on all of that as he does, but I don't get it. I just don't get it. Every video that I've watched of his, I'm just like, oh, this is stupid. Oops, I'm sorry. We dropped out there. Are we back? Would it be possible to attach an alert to the cost basis? Yeah, you can actually. Let me show you how to do that. So I got to be really clear when we're talking about this thing. The cost basis indicator is super interesting, and you will find these situations like this where it will come pretty exactly to that line. You can see that it was like one tick short in that instance. Okay, but it'll come like right to the line and then bounce. And I think what you're talking about is it did it like right there. Well, it did it overnight. I actually went and made a strategy that tried to take trades based off of, if we cross this line, I want to go long, and or if we cross this line, and I tried just about every possible combination of stuff. I couldn't get it to work. It showed some interesting stuff, but the fat-tailed nature of markets, I don't know. But it sure does do this behavior where it will like come like right to it and then stop a lot. So I don't know how you turn it into a systematic strategy, but I'd say we've seen enough from it to suggest that there's something to it. It's really worthy of a deeper scientific investigation that I am not capable of. But anyways, I'm ranting. If you come into it and you right click and you say alert, right? Then you get this thing and you can say on this indicator inventory cost basis, indicator plot inventory long, right? And I can do an offset too if I want. Like I can say like one tick to give myself a little bit of room, right? Cross above. And then I think you click OK. Yep. And so I got it there, and then it will do all this stuff. So I can say, message this triggered, actions, play a sound, share a message, show a pop-up dialog, submit an order. And you can set it to play a sound. Pretty simple, actually. I guess another thing I would mention to you, Billy Ray, is that I only have it on ZN, but when you put it on ZN, ZB, and ZF, it's kind of interesting because you'll notice based on what the spreads are, you know, one of them will be really... So it probably would be with ZB, one of those lines will be kind of like the bottom, and then ZF, one of the lines will be the top, and it kind of does that sort of stuff. What do you think about ATAS? So I haven't tried it in a while. We tried it like in November, I think it was. They were doing some pretty good deals over the holiday, although I think that's over. But I'd say that it is suitable for what we're doing. It was a pretty good platform. I wanted to get into the programming side of it, but I didn't. Never kind of did. I got other stuff to do. So I was feeling the entrepreneurial spirit last night because I was reading about momentum strategies and everything. This guy, he's so funny because in the book that I'm reading, he goes through one chapter where he like goes year by year about the performance of this strategy to show you that it's not all sunshine and rainbows. You know, he's like, okay, yeah, this first year you did it, and if you had 10 million under management, and then you charge the typical 2% management fee and 15% performance fee or whatever the deal is, then you made like $200,000 or something like that. I'm like, oh, okay. I see how this works. I need $10 million to do it, but I see how this works. Cool. I maybe let's keep going, right? But that just kind of got me thinking, and it's been a long time since I've had like entrepreneurial type ideas. When I was younger, it was like every day I had an idea, ADHD, and you just never do them, and yada yada. And then what happened was Facebook came along, and it was kind of like every idea that I had ever had gets replaced by Facebook, and it's like, what's the point? And so I didn't really do a whole lot after that. I guess I did some stuff on music, but then music kind of got destroyed too. Like I used to be pretty try hard on the music stuff before I realized that like it's been commoditized, I guess you could say, so much that you just like you don't make money from it anymore. Oh my. That last little move there in ZN really came through, didn't it? There was a lot of volume on that. It was about 5K orders net selling here, and Big Iceberg at the bottom with 31. So I do kind of want to be in on this downside, but I've kind of been waiting for the top of the hour. So I think that if I was to have taken a trade, I would have liked to have gotten it from here. I don't know if the timing is very good for a trade now. Well, need to keep a little bit closer of an eye on it now, though. Anyways, so my idea is this. What do you guys think about this? Because I've seen websites where like Laszlo, you're not the Laszlo that does the data engineering stuff, are you? I think we'll take a trade today, but it might not be for a while. No, okay. There's this guy there's this guy that he does data engineering for a prop firm, and it kind of talks around because there's this big issue in the data science world where like you hire all of these data science guys on and they're all excited to do data science, and then they can't do it because they don't have clean enough data. And so they spend all of their time trying to get good, clean data. And so there's this big effort to try and, you know, work that better. And there's this guy named Laszlo that talks a lot about that. He has a Discord, actually. He's a really cool guy. Okay, so my idea is this. Okay, I've seen websites where it's like you can post your strategy or whatever the deal is, or like you can post the results of your strategy, and then people could potentially like invest in your strategy and stuff like that. I forget the name of the platforms that were doing that, but I think there's been more than one, right? Wasn't that, or it was one, there was one that shut down. Was it Quantopian? I don't remember now. There was one that shut down because what they wanted to do was, oh hey, we'll have all of these people doing all of this stuff, and then we'll analyze that and find an even better strategy off of that. And basically, it didn't work. Everything that they were being given was just BS. And they eventually shut down. Right? What I want to do is like a much more specific kind of gamified thing. So we'll do it as a momentum strategy. But, you know, it give people the opportunity to do it discretionary. So we'll have a universe of assets, right? A limited universe of assets, like let's say 24 assets that are all futures on the CME. And then for each one of those assets, you can come in and you can say, I am long, short, or neutral that asset. That's it. That's all you get to decide. And when you make a change, that change doesn't take place until the next day, right? So all you're doing is setting up a momentum strategy. Which things are you going to be long and which things are you going to be short? And it can give you, for each one of those, it will tell you, okay, the systematic, like moving average strategy or whatever the deal is, our CTA following strategy, it says this. The general, like, everybody else on the platform, they say this, and then you get to make your decision, right? And you could make it so that you can set up multiple portfolios if you want, so that you can have one that is your like systematic CTA following one, and then there's one that is your discretionary one. Because the question that I have is like, okay, there's momentum. If I come in and I just go through all of these and I say, okay, right now, I want to be neutral oil, I want to be short ES, I want to be short treasuries, long gold, whatever it is, right? And if I actually do that, and I manage it from like a day-by-day period, and you use all of the position sizing rules and so forth that you use for a momentum strategy, how do I do? Because I think that on the longer time frame, I tend to do pretty good, but I'll have big foibles. But I do tend to do pretty good. So I think that at the very least, it would be very interesting to watch my performance. And if I was going to do that, why not have all you guys do it with me? And who knows, maybe the combination of us all is worthy of strategy. And then you turn the website into this hedge fund that we're talking about, where it's like, but this one, it would be like, okay, if you invest into the fund, then you get a vote on every asset. Yeah, that'd be interesting. Don't you think that'd be fun? So I had this idea last night, that I think would be a little different. Let's see, you guys are asking a couple of questions here. It was Quantopian that shut down. What's with volume today? ISM Jolts? Yeah, well, I mean, the volume's not terrible, is it? I'd say in the treasuries, the volume is about what it was yesterday. But yes, the news that we've got at the top of the hour is pretty big, so. But typically the way this goes is you can get some momentum at the start of the year. Usually there is a day within the first week of trading that is like a relatively major day and kind of sets the pace for the whole rest of the year. But things are a little bit lighter liquidity, a little bit slower until after the first non-farms number. So after Friday. So I don't think that we'll be like in full swing with the markets until next Monday. But once you get to that point, that's usually some of the best trading that you get is those first 3 months of the year. At least for us in the treasuries, that's usually the best trading that we get. I know you have me second guessing my idea for the can you beat a hedge fund game. Because none of you were like, oh, that sounds so cool. I want to do that now. No. Maybe you're saying that you're not saying anything, but I'm kind of feeling like, I'm too lazy. Actually, it shouldn't be too complicated of a platform to make, I wouldn't think. They're still selling. It's $5. So, like I was, they are going to do 4%, aren't they? The thing that I was thinking with this was that it was moving just before the S&P 500 opened, and you will commonly see that in the treasuries, and so that was kind of why I avoided trading it. But it looks like maybe you'll get the $10, and then if it moves $10, then that to me is kind of like, okay, maybe I could have done it. Oh yeah, the 10 a.m. news is probably gonna cause a lot of mess. I also watch out because today, where is it? We have the minutes today, don't we? Maybe not. No, yeah. At 2 o'clock Eastern time. Yeah. That's probably going to be pretty drama laden as well. Because I don't think that the minutes are, the minutes are probably going to paint a different picture than what the press conference did in this instance. And, there's a lot of question around this, like why do they seem to be so dovish and everything. So those minutes might shift some people. That's going to be really important. It's what happens today is probably not as important as like the non-farms payrolls. But non-farms payrolls has kind of been kind of random, and I don't really trust it anymore. Like, the revisions are so big that I'm just not sure how useful that is for the markets. But it's still a big number. So I don't think that today is as big as non-farms, but I'd say it's pretty close. Will 2024 be the year of the other 493? They're talking about how 7 stocks basically were all of the profits in the S&P 500. I think I'm still going to do it. Because I want to do this experiment for myself. I could just do it in a spreadsheet, but I think it'd be a lot better to just make an application that does it. They actually looked like they were trying to like dig it out of the hole, but they just keep getting stuck at 30.5. So now I don't want to trade it because there's signs of the liquidity hole, right? And I'm thinking that the liquidity hole will probably persist until the 10 o'clock news. Okay, so it's moving around a lot there now. I'm afraid to take my eyes off of it for even a second. But if I really like laser in on it, it'll just make me want to take a trade, right? You know, if we didn't have the 10 o'clock news, I would maybe do it. I guess I could do it on sim here. Actually, what I will do is if I am able to get advantageous prices, I'll take them. Well, it fell through there. I think the reason why you see so much volume from that is because the 10-year did cross 4%. You have Refinitiv up right now? You know, so I used that for a while. I had the service set up so that I could see stuff about the treasury market. But it didn't really give me enough extra information to justify paying for it. So it was fun to use, but I ultimately the icon thing I wasn't it wasn't quite up to my standards. We'll say there's things about the platform that I didn't like, and it just wasn't giving me a whole lot of new information. I use a new Squawk. I use have an affiliate link in the video description for Financial Juice. And then I use Twitter. I pay for Twitter so that I can use TweetDeck. I pay for Zero Hedge so that I can read their analysis of professional analysts. I tell you what, that last little sweep, it was definitely a stop out. It says, oh God, because I said zero hedge. I have a real love-hate relationship with zero hedge, man. Like, most of the stuff that they post, and especially the political stuff, is nonsense. But there's the only place where you get this analysis of what, like, the major bank flow analysts are saying, and that information is some of the most useful information you can find. Okay. I got filled. I'm gonna blow my nose here. Oh my gosh, I thought I was muting myself there. Did I like unmute so that you had to hear that cough. It was kind of interesting in there how stuck they are there now, but might not get more. I guess, you know, if I want 3985, I might get the chance. What happened there definitely looked like a stop out to me. Actually, I'm gonna scratch this because the volume on the pushback was actually pretty decent. This is actually pretty decent, so it's making me a little nervous. You know, I can take a little bit of risk and wait for the fill, but oregano and honey with a lemon tea. I don't know if I have too much of a cough. It's just like what happens is all of the nasty stuff is like up in your ear canals and everything, and it drains out. And so like while I'm here on stream, it's all coming out. And then by the time the stream is done, there's nothing, and then I don't have any problems the rest of the day for the most part. I took a Mucinex last night, so that like right at 9, so it might, I don't know. I'm kind of monitoring closely the color of what's coming out and stuff. Gross. You probably don't need to hear about that, but... Oh man, you want to hear the gross story? I mean, not that it's a very good... What's this? Swimming in the sea helps because it's salt... Oh, no, I don't want to... The Great Salt Lake is nasty right now, dude. They've been using up so much of the water for such a long time, and then we had that huge drought that the lake is just really gross right now. What I'm getting is only slightly green, so I think I'm in like cytokine storm, you know, where like I'm mostly over it, but my body is still like way super overreacting to the infection. I was gonna tell you the gross story, but now I'm like, I don't want to talk about it. I'll tell you. I woke up. This was like Wednesday, and you know, I was pretty congested or whatever. But I was breathing out my nose in the morning, so I get into the shower, and you know, you getting into the shower loosens everything up and everything, and so towards the end of my shower, I'm like, yeah, I'm just gonna blow my nose. Gonna blow my nose. You know, the blown, and it was like just a really long, steady blow, you know. And you would not believe how much snot came out, man. Like a glob of snot, like my whole hand. And it was like a big green chunk too. I'm like, how is that in there? How does I did not think that your nasal cavity could hold that much. Oh my gosh. It was like, it scared the heck out of me. I was like, did I just like did I just blow something important out there? Like, you know? So if that didn't make you throw up, well, dude, that's like, it's not. The Great Salt Lake is not. Hold on, how do I put this? Okay, the Great Salt Lake is a really big lake, right? And you don't see a whole lot of people saying, hey, let's go down to the beach and chill on the Great Salt Lake. It doesn't happen, okay? It's gross water, okay? So for starters, the whole beach is always covered in brine flies. I think they're called brine flies. There's just like this layer of flies on the beach that would be like the beach portion. So there's that for starters, which is gross, right? And then yeah, it's so salty that you feel gross when you come out of it. Doesn't feel good to be in it. And then on top of that, the water gets nasty. Like there's a lot of stuff living in it that's kind of weird stuff. And what happens when the lake dries up is you get like this layer of like dead organic material. It gets covered up by mud. And then when it rains, it gets all churned up and you can smell it. Like it smells like rotten eggs when a storm comes through. It's gross. And we've been mismanaging the water for it for so long that it's really gotten to a point where it's like it used to be when I was a kid. You know, I could sit from my house and there's an island out there, Antelope Island, right? I could walk from my house to Antelope Island now if I wanted to. Like the lake is just completely gone there. It's just like we've only mismanaged it practically, dude. It's just like, what is this one place? There's a place in there you see Centerville. If you go to a satellite view, do you see this thing right here? You see this thing right here? Just this giant like sore in the middle of the desert along Kazakhstan, right? It used to be a lake. There's still parts of it. This whole area used to be a gigantic lake, and the communists, you know, screwed the ecosystem up and everything, and you know, are using it for land irrigation and everything, and the lake dried up. And it's the exact same thing's happening over here in Utah. Exact same thing has happened over here in Utah. Like the right here. This used to be all water. They don't even get up into the bay anymore. This area over here was a little bit more fresh water because river comes into it, and so this is like kind of a recreational area, but you can't even use it anymore. Yeah, the lake's pretty gross these days. Talk fundamentals, trading strategy, technicals. Oh man, you're not like you haven't watched the videos yet. Did you miss the whole rant where we were talking about, you know, the issues with technical analysis on intraday timeframes? Do I always have to put that disclaimer on? I was just like, do we need to talk about the problems with technical analysis on intraday timeframes? Okay, let's talk about them. If you take 100 trades and you have an edge that wins 51% of the time, 51% of the time, what does that mean? You're and it's equal risk reward, right? Okay, winners are as big as your losers. What does that mean? You'll be profitable because you won 51% of the time, right? But it's 100 trades, so your profits is the difference of two trades. The difference of two trades. So, do you have a statistically significant system there? I mean, because a lot of people are like, you made money, then it must work, right? And hey, do it again. Dare ya? You think it'll come out exactly two trades ahead next time? You probably won't be profitable once you factor in commissions. Maybe. Actually, if it was treasuries, you probably wouldn't be profitable. I think you're probably right. Well, with only 1%, yeah. Okay. But like, this isn't about commissions. This is about statistical significance, right? Okay, if your profits are the result of 2 trades, okay, how confident are you that you're going to get the same results in the next 100, right? Because there's a certain margin of error, right? There's a certain margin of error. What's it going to be? So I don't think I've ever found I don't think I have ever found a setup where I backtested it on intraday data, so like 1 minute, 5 minute bars. All sorts of different setups using indicators, using like price action comparison, these sorts of things. Okay. I don't think I've ever found a systematic strategy that was profitable more than 55% of the time. Like on an equal risk reward, 55. I don't think I've ever found above 55. I have found some that are above 50. But like when you actually look at the properties of this, it's not worth trading because like the drawdown is too big or something like that. Wyckofian. I've never heard anybody use the word Wyckoff, but let me explain to you. Wyckoff, okay. Wyckoff was a trader who was somewhat profitable back in the day, and he wrote a book that basically proposed a theory for how the markets work. And his explanation for markets is kind of appealing to people because it kind of suggests that like there are big players out there that are just manipulating things. And usually the way that they talk about it is they got this pattern, and there's like this exact pattern of some sort, but basically the way that it works is there will be like this false breakout, and then that's when it actually, goes off. So there's this period right here, which is like the consolidation period, where the insiders are accumulating inventory, and then they'll push it on a false breakout, and then push it the other opposite way, is the Wyckoff way of looking at things. So it's, it's kind of like a lot of things. There's maybe some truth to what he says, right? So what do we know about the markets? Well, we know that markets are very inelastic. They respond to new orders very, very strongly. So if I need to come in here into the treasuries, let me tell you what, man, you'd be just absolutely blow your mind how big of hedges these guys need to come in and do on treasuries sometimes, right? You're talking about like 50,000 contracts sometimes, is like not uncommon. Like at the block trading desks at Goldman and JP Morgan, 50 to 100,000 is not unusual at all. Okay. If I need to accumulate 50,000 contracts in the 10-year treasury, guess what? It's going to move it. It's going to move it. So at that point, for me, if I've made the decision that we have to hedge or whatever it is that we're going to do, and we're going to buy 50,000 contracts, at that point, the most important thing to me is to execute it in having the lowest impact on the market as possible, right? So how do they do that? Well, they have found, and if you want to look up the study where they talk about this, it is Almgren and Chris is the researchers, okay? Well, it's like optimal portfolio transactions, Almgren and Chris, okay? And what they do basically is they do all of this data and everything, and they find like an optimal scheduling algorithm where they say, okay, you trade this much, and then that will start to affect the liquidity, so you back off. And then you come back 45 minutes later, and you do it again. And then you back off. And what you actually get is this, right? Except for that it doesn't look like that. It's actually more like this. And then there's a really, really long 45-minute period, and then there's this, and then there's a really, right? That's why you get these. These are meta orders. This is when they're acquiring inventory, and then this is when they become passive and they wait for the liquidity to recover. this kind of happens because you get this liquidity hole where, like, it's just hard to move outside of that area, and you can actually execute a lot of volume in there. So the people that are doing this, they like to just keep it in that area. Now that's something that, like, we know we can prove, right? So you know, I don't know if it explicitly contradicts Wyckoff, but it's just kind of like, well, this is a much better understanding why I even bother with Wyckoff, right? Okay, so the liquidity has pulled. The treasuries have come up considerably since we were pushing down at the lows. Okay. Hold on, Jolts 879, ISM's 47.4. I think I made a mistake here. I'm just gonna bail. I think that what's happening was, like, that initial move that kind of I reflexively hit into was off of the ISM, which was 47.4 versus an expected 47.1. But then the Jolts was lower than expected at 8.79 versus 8.82. And so I think that the counter was the Jolts. And then that's why you kind of got this two-way move here. So, it is coming back and all, but I think I made a mistake, and I'm just gonna... ah, shit. Okay. Could have been better, but that's okay. Let's let it sort itself out a little bit and might try it again. Okay. Yeah, I think I kind of, like, reflexively clicked on that one, and I probably should have paused a little bit. I'm actually really lucky that it wasn't, like, way worse. Could have been way worse. It could have been worse. Okay. So, with that, can I kind of look around here? Okay, that is higher than the bit. That's a regular session high, at least. Do you think that they could go for highs? Well, let me just monitor the volume here for a little bit. Right. Well, Slow Business says that coding would be considerably more complex if the algo had to incorporate quote Wyckoff principles to get more orders. like the big thing, like the big takeaway from the Almgren Chris thing is basically it shows that like your impact on the market is so strong that minimizing that matters more than anything else. And so splitting it up in a way that works with the liquidity the best matters more. Dang, I missed my opportunity there. Okay, well. Now we're 09. Oh, geez. Overnight high is at 12, by the way. Yeah, makes sense. Lay as low as possible. Yeah. But it just kind of comes back into these things about technical analysis, which is like, okay, like maybe there is a pattern. It's just that from the data that we have, if there is a pattern, it's like, it's so insignificant. And that's why it's so hard to make money from it, right? Because some other guy is going to come in that doesn't care, and he just has to you know, he just has to get his orders filled, whatever. He's going to push it the other way and doesn't care about your pattern. And you make more money from predicting that guy than you will from trying to, you know, look at all these quote chart patterns. Dude, the guy that like puked earlier in the session when we touched 4% has got to be super pissed right now. Right? It was me. I'm sorry, Jiwi. You need a hug. Was the volume on this pullback is pretty healthy. The absorption on this pullback is pretty healthy. So I'm not sure what the right price is. No, I tried hitting it as she goes, but it didn't work. Anyways, this looks like something that'll probably continue up. I think that they could get back to 12. Yeah, commodities are soaring. Because I think that, well, so, man, I'm a little mad at myself, to be honest with you guys, because I made a mistake there, right? I was ready to go short the treasuries, and it went, and so I just went with it without really reading all the numbers. So it was an unforced error there. But now that we can see it, what are we seeing? Well, the ISM number was better than expected, but it wasn't too bad. It was 47.4 versus 47.1. Also, prices paid was substantially lower than expected at 45.2 versus 49.5. And then there's the Jolts, which the market has been paying a lot of attention to lately, right? So overall, you know, the market is going to read this as a strong confirmation of the trend that we've been going into that will enable the Federal Reserve to reduce interest rates. So, might be a while. I might like sit in this all session and be like really frustrated, but I think there's a really good chance that we get to 12 and above again. And then we'll see what they do on Wednesday and Thursday. Might be a roller coaster of a week. How much do you earn per month? I'm not telling you that. I don't give out salary information. Should be more specific. How much do you make from trading a month? I'd say on an average month, I make about 50 ticks. But I'm trading super, super small, right? So, you pay the data fees and everything. It's not really much. But I mostly just care about trading and continuing to trade, so I'm really happy with those results. Maybe some point in the future when I'm a little bit more keyed in and don't have as many responsibilities at home, I might size up and try and do something crazy. Don't like that. So I was thinking, well, maybe I could take 965. And I saw a little flurry, so I tried taking as she goes, and that one didn't work out. So I was a little mad that I didn't wait and didn't get 965, but now they're going a lot further than that. No, the pretty solid absorption against it, though. So I think that this could be like a really hairy, but I do want to be long this. In fact, over here on my degenerate gambler account, I'm gonna start picking up some inventory here. Other people's money's in. I really think I could do a good job at running a managed futures setup. It's just like, how would I convince people to invest in it, right? They need like $10 million. I don't think I'm the best person to do fundraising. Unfortunately. So I think what's going on here is that you're getting some big swings in the dollar, and that's why you're getting such heavy pullbacks in the treasuries. Why don't I use a stop loss? Because it's $10, dude. So this market is so illiquid that there's some really big negatives to a stop loss. I have points at which I'm gonna give up on something. This one is making me a little bit nervous because I think that I will need to give this more risk than I usually do. Volatility is high and all. But for now, I think we're okay. Interesting. Icebergs, both sides, 0303, half 3000, both sides. Oil. Yeah, no, that's interesting as well. The oil is rallying pretty hard here at the moment. S&P 500 is actually declining. So I'm wondering if this turns into another risk-off move or not. $6K iceberg on the bid, and they did slip for a second there. How much is it going to be on the offer? Well, the sellers won that one. after going through 7,000 contracts. Hey, Quantum Swift. Oh wait, is that a new name? I don't recognize your name. But welcome to the stream. Oh man. So like an iceberg like that and down ticking is not necessarily what I want to see right now, right? And I would have thought that it would have ticked back up right now, so that's really making me feel not very good. Ah, this is JB. I don't know what JB is either. Unless you're John Bottomley, in which case, why did you fake your death? That was... Never mind. Okay. I'm not liking those offers, man. I'm not, yeah. Not feeling too good about this, guys. I think at this point I'm wrong. Because that's been a pretty decent move against me here. So what do we do? Well, over here on our degenerate gambler portfolio, we double down. I'm just gonna mark this. There was a 6K right there. I would think that it would probably come and latch back up to that 03, but let's see. I'm really quite surprised that it come all the way back to 112 even. Financing. I'm not a huge fan of the prop firm, whatever you want to call them. I think that they were created because there was a time where it was really difficult to gather up enough capital to be able to trade futures. Now that that is no longer the case with micros, I really don't see the point to them. Okay, the dollar reverted all the way back to what it was before the news and is now turning back down around. So I think that if I had not taken this, I would have been trying to get in here 398. Okay. Oof. It's definitely the dollar. It's definitely the dollar dominating us right now. See, so like I said earlier, I think I'm wrong. On a longer time frame, it may end up being, good, but I was expecting more flow to come in long in the treasuries. I think that the situation does suggest that we could see buying in treasuries, but That's not what we're seeing. What we're seeing is that dollar trade is dominating us instead. So I would call that wrong. That my prediction should have been, oh, the dollar is going to dominate us and is going to do this. And then maybe I would have adjusted my trading, right? But we made our choices. Now I got to sit and live with them. There's a decent iceberg there at 01. It seems to me lately that if you get a little bit of trend going into the news, that like that trend ends up being correct. Like over the last month or so, it's been like that. Almost every major news event. Okay, that was a little weird. It ticked up and there was actually a pretty big tick, and then they almost immediately got slumped back down. S&P looks unhappy. Well, let's read Zero Hedge's story about this. For the 15th month in a row, ISM Manufacturing Survey signaled no expansion, print over 50 in December. And while the 47.4 print is up from November's 46.7, it is still a contractionary signal. Companies are still managing outputs appropriately as order softness continues, said Timothy R. Fiore, chair of the Institute for Supply Management Manufacturing Business Survey Committee. Demand eased with the new orders index contracting at a faster rate. New export orders index essentially flattened. Backlog of orders index climbing back above 40%, but still in fairly strong contractionary territory. None of the 6 biggest manufacturing industries registered growth in December. So even though it was like slightly higher than anticipated, it looks like a really weak report. Oh, what's this? Oh. Okay, I think I'm okay. I can see the dollar came back up there again. Is it doing this because people are liquidating stocks and buying and moving into the dollar? But if that's the case, I don't understand why the treasuries aren't reacting more aggressively bullish and like ignoring that correlation. The strategy, I think that if you're trying to day trade, that you should try and look for informational inefficiencies. Well, now you got a pretty big order there at 31.5. Moved down. It's like a 4K lot sitting there. He moved it down again. Don't mess with me, dude. Come on. He keeps moving it down. Well, let's come to Twitter. Eric Wallerstein. Economy continues to cool. Job openings fell and manufacturing prices fell to 45.2 versus a prior 49.9. Nick Timoros. The latest Jolts report suggests job turnover continued to cool in November. Openings fell below 9 million, using a 3-month moving average, the lowest in 2.5 years. Meantime, other measures of labor market tightness returned to their pre-pandemic levels. Hiring rates in November actually dipped below the levels seen in 2018-2019, while quits rates are running around their pre-pandemic levels. But for some reason, the treasuries are actually a little bit lower than they were and just can't seem to find a bid. A dollar kind of turned around there really hard, so maybe. Now they're going to play this game where it's like, okay, now the dollar actually does what we want, and then the treasuries won't react at all. It has happened to us before. Although that last bar there in the dollar really did turn down hard, so. I don't know. I can't completely make sense of this at the moment, to be honest with you. Okay, that was a really strong uptick. Wow, three ticks there. Lots of volume on that. E-mini turning back up. I don't know. I don't see that big offer there anymore. It was around 29.5. Disappeared. And now I'm seeing it above us. Meanwhile, the treasuries are like, that 10-year is almost practically right where it was. That was not that significant of a move for ZB for whatever reason. Okay, well, some of the orders that 0.0 half pulled, that helps. Some big order shenanigans I haven't seen in a while. And then it pulls at 0.0 half. Yeah, and they try and take it back down at 112 even. And the big order comes back. I don't know if this is like manipulation or what. Look at the dollar too, by the way. It's trying to recover that big down bar. I felt like the initial release was really messy, sure. And then, but after that, I felt like what it did was pretty clear. And then since then, this whole downtrend has just been kind of confused to me. There's still some big orders there at 112. And at playing these games, pulling and stacking. There's definitely like one guy who's got 2 lots. Kind of messing around with them. So like it ticked up, he canceled it. I'd really like to see like they put the 4K up there and somebody hits it and then see how he reacts, right? Nothing's more entertaining than watching a spoofer like that get caught. And he blows through them. Probably not going to happen, but I can dream, right? Okay. To make any progress here, I think the 30-year is going to have to come back up to like this 07 area. Volatility in the Federal Reserve repo market rising for the first time in 5 years per Bloomberg. Down ticket 31.5. Well, shoot. Was that bigger of a bet than I should have taken in that situation? I don't know. I really felt like I was right. Really did. Did not work out this time at all. This has been a disaster, and those 4 ticks down there are very devastating. We did see the dollar like move back up there a little bit, so that might be part of it. The issue that I'm having in a situation like this is I'm like, okay, so I had a prediction of what the flows are going to be, and they were something different. So what are some theories as to why the flows came out the way that they did? And I really at the moment can't think of any. But it's been like a net 15,000. Yeah, a net 15,000 sell from the highs for no apparent reason. I should say for an unknown reason. I don't know. It's like they just like 4% or something now. It's more than the buying that on the news. This reminds me of a Me Too movement. I don't know. Something I find also very curious was that there was a point there at 112 where there was like really aggressive buying orders there and everything. And then that was it. Like it fizzled out, right? It does kind of look like they might get back to the 112 even, though. Another thing is those big orders, right? Nothing I hate more than I'm in a position and then I start seeing big orders start to do shenanigans. I also want to point out, I'm not seeing the yield curve really move here. The ZB looks kind of heavy, but did some research and it seems like doesn't seem like someone would be able to go from 0 to, and yeah, no, definitely not. That's something where like you become a software engineer or a DevOps engineer, and then once you're in the job, start working towards becoming an SRE. Make everybody know that you want to do SRE and whatnot, but you want people with experience in that role, yeah. So it's not an entry level position. But if you go into it with the idea that I'm going to work towards being an SRE, you can definitely do it. Well, I think it doesn't get much worse than this for me, guys. You have to be on call for this position? Yeah. Generally speaking. I haven't been in a situation where like I had to be up all night or anything like that, but you know, problems always happen during the day.
just trying to distract me from the trade. Why shouldn't you be trying to talk me out of it? I don't know what to do, dude. Like, we're to my breaking point now. I still don't want to give up on it. But this has just been all against me the whole time, and I'm just really like, I'm really flabbergasted that it's going this badly. I am, you know, so like, how does it do that? How can it be that wrong? I've got to be wrong about something. And then I go back down through all of the information they have, and I'm like, no, I still think that you buy it here. Like, I don't know. I guess sometimes it just doesn't work for you, but I'm really frustrated. It's got to be something to do with the currencies, because the Japanese yen went lower. Morgan Stanley's Gorman, Bitcoin not going away, but not a core investment, says on Bloomberg Television. Oh, and Bill Ackman, who led a campaign to oust Claudine Gay from Harvard, said the school's board should be removed over its support for the embattled ex-president. Yeah, that's the way you do it, guys. You win, you got what you wanted, push harder. Yes.
Oh my gosh, I read that whole thing and I was on mute. Oh my gosh. That's how bad. This is just the worst day, isn't it? They came back to 112, but they can't seem to recover 112, man. I don't know. Yeah, I was just saying, I was reading about the job openings number, and they were basically talking about how most of it is like estimated. So like, I don't know. My take on it is still that this looks really bad for like that the economy is very much slowing, and that this looks good for interest rate cuts soon. But we're still trying to understand why treasuries are so attached to the dollar and are not rallying on this news. Perhaps that news was already like quote unquote priced in. I don't know. I mean, we were pretty high when you look at where we were, you know, on December 27th, you know, 113.12. And that seems like so far away, but it actually isn't. See, I'm like coming into this like, you know, it seems like 6 rate cuts ain't gonna happen unless the economy is going into recession, right? Now all of a sudden I'm starting to think maybe we really actually are going into a recession, right? That's kind of where my shift. So I'm just really bewildered that they sold that so hard. Somebody had to have been taking profits there or something. There's 112. I'd like a better bid there, but and also it looks like the Treasury is kind of starting to do more of its own thing rather than just following the correlations in the dollar. But the way that worked out in the dollar is actually like really wild, right? Wow, that was a big decline though. Well, what did it go? It went from 102.15, let's say, to 102, and now to 102.30. So it went down 15, and then it went up 30, and ended up higher in the end on the day. Now that may be because does seem to me that some momentum trades have come into the dollar, so maybe that's why the dollar's doing that. Because they're ignoring the news and just doing the momentum. But I still don't understand why the treasuries are reacting to it that way. Because what I'm seeing right now is that the treasuries are basically getting swapped, you know, like right when the momentum started to turn back down, you get a couple of data points that kind of suggest, no, actually it should be up. Okay, now did you see that? Okay. Well, so what happened there? Okay, here's why I find what just happened there really wild is that we had sat there at like 112 even 112.01 for a really long time, and then kind of moved down. We recovered a little bit, couldn't hold it, went down, stops. Okay, then we come back up, and they just completely blew through that area on its first pass through. They slipped right through it. I suppose the liquidity hole is maybe still there. But there was some pretty strong market volume with it as well. So like, and now the flows are turning up higher. We'll see how far they eventually get with it. But, you know. Pretty advantageous slip for me. Well, we're coming up into average cost basis for sellers, so there might be some resistance here. Let's see. A little bit of an iceberg at 0.5, but it looks like you're chewing through it pretty good. Like the flow is definitely there, but then it didn't bid. Okay, so Eleanor Tarrant on Twitter is saying that the SEC is holding meetings today with the exchanges to finalize comments on the 19B4s submitted by the Bitcoin spot ETF issuers. And I am seeing a little bit of a jump in Bitcoin on that headline. Am I going to extend the stream? No, I really can't. I'm really interested to see where this ends up going, huh? Honestly, though, I think that what might happen is if I get my break-even price, I'll just scratch it. Like, regardless of what happens, that was probably my worst trade in over a year. Maybe I'm right. Maybe my reading of the situation is correct and that, you know, that's just the way the flows go sometimes, but very unhappy with it. Very unhappy with it. But I gave you plenty of rants earlier, so. you know, I'll probably hold this, and at least, you know, I don't think that I'd hold it past the options close, but we'll see what happens. They seem to be pretty comfortable at 0.5 there, though. So that's kind of the other issue, is that like let's say I decided to extend the stream 30 minutes, which I can't do, but might not go anywhere in that 30 minutes. It might take a lot longer for them to move. But look, you can see where my orders are at and everything. What happens, happens. And what happens, happens. Did you miss an extra rant? No, I front loaded it all today. Front loaded it all because I knew that that probably after the news that I would probably be in trades. I'm going to need to look back on how I did this, because I'm not sure I can completely explain why I did what I did off of the initial trade, and you know, why I've managed this one so poorly, and why it's gone so poorly. Is just like, man, this is the kind of trade that makes me want to just take a step back for a week or two and not touch it. Because I'm clearly out of sync with the market about something. That, or it just hates me. They know that I'm sitting here. They know that I'm hanging on, and they're like, "Well, we're gonna push it down as low as we can, just to scratch, you know." And then they gave up on it. I was like, I guess he's not gonna scratch. We'll just let it, you know, do its thing. Came back up to almost the break-even point for the sim trade. What is the stream rant standard? Because you got like 3 of them. And you got one of them where I did the rant twice. Same rant twice. The same thing. Because somebody came back. I don't know. You think that guy will come back tomorrow? I'm going to bet you no. I've really gotten to the point where it's like, you know what? If you believe in technical analysis, cool. Go away. The thing that really bothers me is all the people that, you know, like if you can't program, I don't think you have any business trying to do technical analysis or discussing it or anything like that. Anyways, time for me to go. I will see you tomorrow. I'll still be in Discord. I'll give you an update in Discord about how this ends up. But in the meantime, stay excellent, team.